Good morning, traders. Welcome to StockCast. My name is Todd Derby, along with my co-host, James Mason. Good morning, James. How are you doing today?
Todd, good morning. I'm doing well. How are you?
Doing well. Anything new, anything special going on?
Well, inflation.
Inflation, yep.
Yep.
We're going to talk about it today, aren't we?
Yes, we are. So real quick in the comments, let us know how inflation is working in your area. Now, you don't obviously have to tell us the area you're in, but just kind of give us some examples of what you have noticed with inflation so far. So let's go ahead and get into it. So the market is currently up. Let's see. The Dow futures are currently up 126 points. The S&P 500 is up 23 points. And that's just our typical pump and dump market that we have. So as we talked about the other day, in regards to Jerome Powell, brief in Congress, talking about his plan for how they're going to handle inflation. He really didn't say anything that was too great in his, I don't necessarily want to call it like a court hearing or anything, but, a testimony. That's what it was. It was a testimony. And it really doesn't make any sense how the market is wanting to do this little bullish bounce. It makes no sense at all. But really, I personally don't believe that the government has started to even taper at all, like they have been saying that they were supposed to. They literally have $9 trillion on their books, and they're gonna have to unload that at some point to start, selling off their balance sheets. $9 trillion that they have pumped into the markets since the Great Recession. It's honestly, it's mind-blowing and yet scary at the same time that as a nation, we have only held ourselves up with debt and debt only. We haven't been progressing. And that's going to be our greatest downfall as a nation, as we can already see. So when talking about inflation and supply and demand and whatnot, there's so many people. I was telling Todd Premarket this morning that I read an article yesterday of this lady who was complaining. She lived in Connecticut. She always complained to her grandma. She's 30 years old, about how she hated her job working at Starbucks as a barista. And her grandma told her to just follow her passion, follow her dreams. And that was to deal with animals. And as I was reading this, I was thinking, she's probably going to go be a veterinarian or something. No, she decided to start walking dogs part-time. Okay, I get that makes her happy. But a part of her little argument was how she said that she didn't feel appreciated working at Starbucks as a barista and money concerns. Well, we have to have some common sense. And common sense, when it comes to making money, would say that walking dogs part-time is not going to make money. It's not a career. Now, there's nothing wrong with doing that, but when your complaint is lack of money, that's not your answer. So we have this big issue with inflation, and then this entitled, I personally just think it comes down to a lot of entitlement. And, Todd, you can, tell me your opinions, but it comes to entitlement with these people in the labor field, the labor market, who are just quitting their jobs because they don't like their boss. The whole anti-work movement that's going on.
I think there's a piece of the puzzle here. When you look at the history of different generations, there's the baby boom generation that did phenomenally well with the stock market, and they worked their corporate jobs, they worked their pension retirement jobs, and they have 401ks that are fat, and they've done well. And so you're talking about the grandparents of today that are taking care of their families, and as they're passing on decent sized inheritances, and the generation right after the baby boomers is surviving. They're doing well, and they think that that's going to continue. Well, the grandkids of the baby boom generation are seeing this lifestyle that they lived, and they're like, I can walk dogs because my mom and dad are going to take care of me like grandpa and grandma took care of my mom and dad. And when they realize that's not going to happen, they're going to be near retirement and they're going to be shortchanged. They're not going to have the nest eggs. They're not going to be living in the homes that they're used to living in, or driving the cars, or vacationing than they grew up with. And that's going to be a travesty, I believe.
Absolutely. Really the only solution to this labor market issue and the people in the workforce who are just that entitled is to simply turn everything into robotics. That's the only solution. And then everybody's going to complain. You know, when that day comes, everybody's going to complain. Oh, there's not many jobs because of robotics. It killed us. No, the labor market, the people in the labor market, y'all killed it. Y'all have put entrepreneurs and business owners into positions to where, in order for them to survive, they had to automate everything. And it, you know, once you automate something, man, your costs go down tremendously. Once you take the human out of the equation, it takes away so many issues. So unfortunately, that is where everything is going to go. So, you know, when talking in terms of inflation and everything and the government pumping all this money into the market, it also kind of like leads us into the next side of the market, and that is crypto. If you've been paying attention, you should probably know that crypto has been taking a beating overall. And I actually read a report this morning about the growing concern. Let's see, the IMF calls growing correlation between crypto and financial markets a concern. And their big debate was, why is the crypto market following the stock market now? And it is weird, because I always thought the whole point of the crypto market was decentralization.
Crypto's always been a hedge. It'd be something opposite of the market. Mm-hmm. But I think where you're headed is you're going to talk about institutional ownership in funds or trading crypto.
Exactly.
Involving crypto.
Yes. The only way it could actually follow the market is if, in my opinion now, I mean, I could be wrong, and let me know in the comments what your opinions are. But the only thing I can think of for the reason why over time crypto has somehow started following the market, the pattern of the market, is the institutions have gotten involved. They're so deep into crypto. They're the ones pumping up the prices. They're the ones they're using the same tools, the same algos to trade crypto that the markets are being traded on. And that's why everything has started to sync together. So where does that put the crypto markets, since it's supposed to be decentralized? And I mean, I understand the tech behind the crypto, and it is, well, not all of them, but some of them are decentralized. But when you start having the institutions who control the supply, then they control the market. So we're back to square one again. And where do you go from this point? If the people who have caused all these issues on Wall Street and the government and whatnot are now controlling the crypto markets, man, what do you do? You know, how do you start over? How do you break away from them? And I don't think there's really an answer for it. So I'll let you guys think on that. Let me know in the comments what everyone's thoughts are. I want to read them. I'm curious to see what everybody has to say about it. If you even have an opinion on it, heck, you might not even care. But you could be one of the 4% who made so much money off of crypto that it doesn't even matter anymore.
Yeah. All right, let's go to the comments and say good morning. Good morning, people. Good morning. That's John. Thank you for your news comments.
Yeah. So
top shelf again.
Let's drop some tickers in the comments. Let's see if we can't find a good trade. I mean, I have trades for alerts, but I'm not gonna dump them on YouTube. Let's see. Lunic, is CFVI going to do anything? Let's take a look. Share my screen. All right. Give me a moment to pull up some quick data on this. All right, so they have 30.7 million shares outstanding. This looks like a SPAC. Okay, so just off the top of their news, is just seeing a lot of just random headlines about the company Rumble. Nothing in particular. It just looks like random headlines. So looking at the daily chart here, you can obviously see the strong push up, the interest here, and then it's selling off once it hit that $14, $15 range, coming down here, bouncing off the 86 EMA. And guys, I'm telling you, I know this is not standard, but if you remember me first bringing out the 86 EMA and how I just said, really one day I was just like, you know what? I use the 950 and 100 EMA, and what happens if I just come up with the average of it and it's 86? And I'm telling you, this thing can catch so many freaking bounces. Use the 86 EMA. You heard it first from me. I'm the one who came up with it. I'm the freaking inventor of the 86 EMA. I invented the number 86. So, all right. Okay, so we can see the bounce off the 86 EMA and coming up here. This is looking like a cat. Can't even talk this morning. This is looking like a dead cat bounce. I don't think it's looking well at the moment. I obviously don't know their catalysts overall, what they have going on. But right now, just looking at these charts, it's not looking too well. I would be afraid that it's catching some resistance right in here around this 1258 range. We can see these wicks going up and getting rejected off of that. I would be afraid that's going to get rejected off of this, or even if it slightly just goes over that range, that it's going to just break down afterwards and then sell off again. That's what my concern would be overall. How I would personally play this one is, if anything big is going to come out of this, it should technically move this up and send this thing just like screaming sky high. So me personally, I would just go and wait for the all-time highs, the break above the all-time highs right here. So the break above 1548 before even considering making entry. Now, we don't have any data to go off of to know about how high it would go, but I mean, that's just how it works. In my opinion, anything in between, this current range around 12 on up to 1548, it's just playing in between the lines. And yes, you can make money playing in between the lines. People do it every day. That's literally the market. But me personally, with how I view things, and I could be saying this because I don't understand what they have going on. And then, I don't know if they have any catalysts. I'm just looking at a chart here. But me personally, I would wait until the break above the all-time highs. And the reason why is, if this company or this SPAC, this ticker, is doing anything significant, it should, with only 30.7 million shares, in theory, it should go screaming higher than 1548. So if we do see that break above all-time highs, then there should be a catalyst in play there, and you can ride that momentum out. Now, if it breaks above that high, it's probably going to have a nice sharp spike up, depending on how it goes, and you just have to be ready to cash in. Chances are it will just be a day trade. We don't know how long that run will last. So it would be locking in profits that day for me personally and moving on from there. So that's what I see for ticker CFVI.
Nice.
Let's see. Todd, do we have anything else in the comments?
Take a look at, was Hood an alert for us?
No, it's not.
All right, go ahead and take a look at Hood. A couple people have asked about that.
What are the questions about Hood?
They don't. They just put it in there as a ticker.
Robinhood. Let's see. Steal from the poor, give to the rich. All right. So Robinhood IPO'd at $38, and we obviously saw their FOMO spike right off the gates, and then it's just been dying off. Now, long term, okay, so for starters, I don't know how low Robinhood is going to go. Nobody does. But long term, Robinhood will get their shit together, and they'll start functioning like a strong social media broker. And I do think that once they have a change in leadership and business strategy and figure out, what's going on, like guys, like you do have to think that, like, disregard all of the BS that happened with GameStop. That's literally the only reason why people hate Robinhood right now is the whole GameStop AMC saga that took place with the short squeeze stuff. But they're still a young fintech company, very young. They haven't worked out the kinks yet. They're still establishing themselves, and once they do, I do feel like long term they'll really, really make a push up, and we will see these higher ranges. Like I feel like personally at some point, and again, when I say in the future, I don't know. It could be 5 years from now. I don't know, but I do think we'll break above $85. Robinhood, I mean, their customer base is so freaking massive, and really their only contender is Webull at the moment. But there is a huge downside to Webull, and that is they're owned by the Chinese.
Yeah.
So Robinhood, in the end, is going to be the go-to platform in terms of just the general retail trading brokerage platform. So me personally, how I like to play IPOs, there's 3 ways. One, when they get beat down like this after a while, I like to see them sell off and just get decimated, and I'll slowly scale in for longer term holds. Like I don't care if it keeps going down because I'm slowly scaling in over time. It's also not the only ticker that I'm trading. So I'll let them get beat down like this, and when I start to see them kind of level off, I'll take a smaller position, maybe 100 shares or so. And over time, I'm building my position here. And that's one way I play it. And then, I'll let it bounce, and whatever it does after that, it does, and I'll sell it. Another way I like to play IPOs is I'll wait for the break above the IPO price if it's getting beat down like this. So let's see, Robinhood IPO'd at $38. We're currently at $16.72. Yes, that is a significant range from here to there, but we need to look at overall momentum. If you're not using strategy number 1, like I just spoke on, which strategy number 1 is going to take a long time, then you can put an alert in for Robinhood at the break above the IPO price at 38. And when it comes back up, that's a good indication of momentum. And chances are when it comes back up to break above that IPO price, it's probably going to come somewhere between IPO price on up here to the high before it gets rejected the first time. A lot of times, when it makes that push up, it'll get rejected and come back down. And then that second or third time, it will actually break above their all-time highs and create new all-time highs by just becoming a runner. So that second scenario, I'll wait for the break above IPO price. And then obviously the third scenario is waiting for the break above all-time highs, which is, it's just way up here. In this scenario, I personally would not want to wait from $16 to $85. I think that's stupid. If I was serious about making money long-term here in Robinhood. And if I had to choose between those 3 scenarios in terms of like Robinhood, I would probably choose scenario number 1, and that is slowly accumulating shares, whether it be at 16, at $4, at $1. It doesn't matter. It all comes down to due diligence, and does the company have a marketplace? Does the company have a future? Like, is their service something that people will use in Robinhood? Yes. People are not going to leave Robinhood no matter what happens. So Robinhood does have a lock on the market. Now, from a technical analysis perspective, if I was going to go for a quick pop, I'd wait for this break above 1910. We will start to see a little bit of a resistance here, but with this quick pop,
16.
we could have a little run from 1910, possibly up to 2654. Now, once we get up to this 2654 range, we will start to hit that strong resistance on the bottom side of that 86 EMA. And then it will probably get rejected, roll back down, and then hopefully the future could make it come back up. So me personally, with how I trade, this is what I see in Robinhood. This is how I would trade it based off of a technical analysis standpoint. So that break above 1910. So that is Robinhood, ticker HOOD.
All right, thanks. We're under 7 minutes to the market. I don't have anything else to talk about. You?
No, I don't. So I'm just
all right. Good talk today. Good chat about crypto and inflation, and how we play that into our trading activities.
Yeah. So let's let me take a just quick peek at the market again. Okay, so futures are still up. The Dow's still up at 102. We went down a little bit, and the S&P went down a little bit, down to 19 3/4. So just be careful, guys. We know that the Fed Reserve is lying to us. They're trying to unload their bags, and at some point they're going to pull the rug. Just be prepared. Smaller positions is really the only thing that I can say to be prepared. I mean, it's okay to take a hit, to take a loss, but if you're in a large cap and you have all your money tied up, especially if you're in large cap options, swinging them, and you're all in with some contracts, especially calls, the day that they pull the rug on you is the day that you lose your entire account like that. There's nothing you can do about it. So remember, guys, trade safe, trade smart, and we will catch y'all in the next one.